Welcome to Global Tax Talks. I'm Will Morris, and I'm delighted to be joined today by Edna Gitachu, who is our Regional Tax Policy Coordinator for Africa, and by Kyle Mandy, who is our South African Tax Policy Leader. Welcome to both of you.
Thank you.
Thank you very much.
So it's been, I think, probably about 9 months since we last sat down and did a Global Tax Talk when we were in Accra in Ghana. And that's an appropriate period to come back and look at what's happened, because quite a lot has happened, including at the UN and in various other places. So Kyle, I'm going to start with you. So African tax policy is being impacted by various initiatives and groups. We know obviously about Pillar 2 implementation and the OECD, but also the UN is asserting a much greater role. And this really has been a movement in the past 9 months for a framework tax convention, which is an initiative which is actually launched by the African group. Other groups such as the African Tax Administration Forum, or ATAF, now also weigh in. So could you give us like a sort of bird's eye view of where we are right now?
Sure. So look, from an African perspective, most African countries are resource constrained. So they're pushing hard for revenue mobilization to increase their tax revenues. The question is, how do they do that in the most effective manner, number one, and two, in a simplistic manner, bearing in mind that most of them, if not all of them, are severely capacity constrained, both in terms of the ability to introduce tax policy, but also then to implement and administer it effectively. So that's a brief outlay of the lay of the land, if you like, insofar as that's concerned. At the same time, we've seen, as you alluded to, the likes of Pillar 2, which is inordinately complex legislation. The ability for African countries to implement such legislation is, if not implement, certainly administer it, is lacking. So even though you've seen the likes of ATAF push for countries to implement at least a QDMTT in the African context, you've seen very few actually having done so to date. And I think that's largely because of capacity constraints. On the other hand, you've got to bear in mind as well that out of 54 African countries, only 26 are members of the inclusive framework and haven't played a particularly active role, for the most part, at least anyway, insofar as Pillar 1 and Pillar 2 are concerned, relying heavily on ATAF. ATAF, on the other hand, has got 41 of the African countries as members. Yep. So they have a lot of influence, and perhaps far more influence than the likes of the OECD would have over these African countries. And so when ATAF comes along and says, we recommend that you introduce digital services taxes, those countries listen and more inclined to listen to ATAF than they are to the OECD, particularly when they're receiving information that they're going to collect more revenues, coming back to that point, from DSTs rather than from Pillar 1, assuming Pillar 1 actually even goes ahead. But also, bearing in mind Pillar 2, they're not going to collect significant revenues either. So that's the main driver behind that. And of course, the UN, much greater focus on source countries' rights to taxation, and focus on withholding taxes, coming back to the point around simplicity. So I think that's what's driving African countries more towards a sort of UN approach than the very complex and difficult approach that the OECD has taken to date.
No, that's great. And I mean, I think that point about withholding taxes is really important, because obviously what we see with DSTs and now what we see with again, more of an emphasis on withholding taxes is a return, if you will, to gross basis taxes, to gross revenue taxes, rather than net income taxes. And I think we need to think through what the investment implications of that might be, but that's perhaps for another day.
Absolutely.
So Edna, let me turn to you and let's drill down on your home country of Kenya, which very late last year, which is 2024, actually enacted a significant economic presence test, which replaced the digital services tax. So what's happening in Kenya, and do you think that might be a blueprint for other African countries as well?
Yeah, so thanks, Will. Let me start by saying that Kenya first enacted the digital services tax in 2021. The rate was 1.5%, and there was no threshold. So as you have rightfully mentioned, through the Tax Laws Amendment Act 2024, there was an amendment to the law. So the digital service tax was replaced with a significant economic presence tax. What are the features of this significant economic presence tax? So one, unlike the previous digital service tax, is now a threshold of about 5 million Kenya shillings, which translates to the equivalent of $38,000. which is very low.
Not so high.
And the other feature of the significant economic presence tax is that it assumes that 10% of the gross turnover is actually the profit. And that profit is then subjected to the corporate tax rate, which is currently at 30%. So effectively, you may want to say that the rate is 3% of gross turnover. So we have doubled from 1.5% to 3%. To your second part of the question, whether this is going to be a blueprint for other African countries, Carl did talk about the influence of ATAF, and the ATAF, that's the Africa Tax Administration Forum, in 2020 did suggest that the rate of DST should be between 1% and 3%, so that it's a reasonable rate and it's not going to be a rate that is going to impede investment into the continent. So I think as African countries are reviewing their rates, if they so choose to review, they should make sure that they're not going to distort the investment atmosphere in the countries.
That's great. So let me ask you another question, if I might do, about this. So I mean, we're talking about DSTs, we're talking about withholding taxes, we're talking about things which may or may not approximate to income taxes. Do you get the feeling that there is a movement away from what we would call direct taxes, corporate income taxes, towards other types of taxes? Or because of what Kyle was talking about, which is the need for revenue, actually a country is just doubling down on every sort of tax that they can find?
Yeah, so because of the fiscal deficits that Kenya and other African countries are having, we are now relooking at our tax laws just to see whether there is opportunity for us to raise more money. So as we've discussed, the whole issue of replacement of this digital services tax with a significant economic presence tax and doubling the rate, probably the drive could have been to mobilize more revenue. There's also withholding tax that is being implemented. So last year, there was an introduction of withholding tax, and the hierarchy of the law is that you either are liable to withholding tax first. So if you're liable to withholding tax, you are not liable to the significant economic presence tax. And the withholding tax rate is very high. It's about 20%. So again, looks like efforts to raise as much money as possible.
Right. Okay, well, we clearly need to keep an eye on this. So Kyle, let me come back to you. So South Africa has just assumed the G20 presidency from Brazil, and we'll have that through November of 2025. So what do you think is on the agenda involving tax? In fact, is there anything on the agenda involving tax? Because some countries have been more about that. And how can companies prepare for whatever may be coming?
Yeah, sure. So look, the information that we have seen, insofar as that's concerned, is that unlike Brazil, South Africa will not be pushing the agenda around the introduction of a global billionaires tax. And maybe some perspective in that. Africa only has $20 billionaires in total, 6 of them in South Africa. So you can understand why it would not be a priority from an African perspective. And that, I mean, the taxes they would collect will be minimal insofar as that's concerned. What Africa does have, though, is a challenge around being able to tax its high net worth individuals, particularly in concerns around illicit financial flows and assets being hidden offshore and so on. So what South Africa said they were going to focus on is exchange of information and transparency. And to be honest, and that's probably where you're more likely to get some traction from a global perspective, rather than looking at brand new taxes. It's going to be difficult to implement in any event. So that's the real challenge from an Africa perspective, is to make sure they're collecting the right amount of taxes on their own citizens, rather than a wish and a prayer of collecting some taxes from someone who knows where.
Yep. And so, at least on the corporate front, perhaps not that much more to say at the moment.
No. Look,
I mean, obviously, other than the support for the UN.
Absolutely. So, obviously keep an eye on what's going to happen at the UN perspective. What South Africa has said, though, is that they will push the Africa agenda. Under the German presidency, Africa was a focus. And South Africa is going to resurrect that as well. Nothing specific from a tax point of view that they've said insofar as that's concerned, but generally about making Africa more investor friendly. So again, watch out for developments in the tax space insofar as that's concerned as well. We don't know what will happen, but it could very well be developments.
Right. Well, my calendar tells me, or diary tells me, that we will be together again in about 9 months' time. So we will look forward to doing another of these and seeing what's transpired over that period. But Kyle, Edna, thank you so much for joining me. And thank you for joining us, and come back again soon so that you stay global tax ready.